A few years ago, almost nobody thought of a car wash as a serious investment. Today, billions of dollars of institutional capital are chasing them. The reason is a single powerful idea: the subscription. The modern express car wash turned a one-time $20 service into predictable, recurring monthly revenue. And that changed everything. Here's the economics of owning a car wash and why investors fell in love with the bubbles. Start with the model that started the boom: the express exterior wash. A car rolls onto a conveyor, gets pulled through a tunnel of soap and brushes in about 3 minutes and drives off to a row of free vacuums. No staff scrubbing by hand, no interior detailing, just high volume, low labor, and a fast, cheap, consistent wash. That simplicity is what makes the economics so attractive. The unit economics are genuinely impressive. A mature express wash can run 50 to 65% EBITDA margins because the water and chemicals are cheap and the labor is minimal. The marginal cost of washing one more car is tiny. So once a site covers its fixed costs, almost every additional wash drops to the bottom line. High throughput plus low variable cost equals serious operating leverage. But the margins aren't the magic. The magic is the unlimited monthly membership. Instead of paying per wash, customers pay a flat monthly fee, often $20 to $40, to wash as often as they like. Suddenly, the car wash isn't a transactional business at the mercy of the weather. It's a subscription business with predictable recurring revenue. That's the shift that brought Wall Street to the car wash. Here's why members are so valuable. Many sign up, use the wash a few times, then keep paying out of pure convenience and inertia, sometimes for months without coming in. A successful location builds a base of thousands of members, creating a steady stream of monthly revenue that smooths out rainy weeks and slow seasons. The business stops living wash to wash and starts compounding like a subscription company. And predictable revenue is exactly what investors pay up for. A business whose income arrives on auto pay every month, regardless of weather or season, is worth far more than one that depends on walk-up traffic. That recurring revenue profile is why express car washes attracted a wave of private equity roll-ups and why the strongest operators expanded so aggressively. The subscription turned a humble service into a scalable cash flow machine. Now, how does a real estate investor get in without running a wash? The same way as so many of these net lease assets, the sale leaseback. An operator builds or buys a wash, then sells the real estate to an investor and leases it back long term. The operator keeps running the business and the memberships. You own the land and building and collect the rent. It's the passive way to participate in the car wash boom. These leases are built for passive ownership, 15 to 20 years, absolute triple net, with the operator covering taxes, insurance, and maintenance. Rent escalates steadily over the term. The strongest deals carry well-capitalized regional or national operators. Names like Mr. Car Wash, Take 5, Quick Quack, and Go Car Wash. As always in net lease, the strength of the operator behind the guarantee is what you're really underwriting. On a sale leaseback, pricing follows the operator's strength. A wash lease to a strong national operator trades around 5.75% to 6.75%. Regional operators and single site operators carry higher cap rates to reflect the added risk. Most deals land between $3 and $7 million. Cap rates did soften a bit after the frenzy cooled, which has actually created better entry points for patient buyers. This is the discipline that matters most. A car wash is a specialized building. If the operator fails, you can't instantly drop in a clothing store. So the operator's financial strength, the size and health of the membership base at that specific site, and the location's traffic are everything. A strong operator on a busy corner is a wonderful asset. A weak operator on a quiet road is a building full of equipment you don't want to inherit, which leads to the categories defining risk. Saturation. The same economics that drew investors also drew a flood of new construction, and some markets are now overwashed. Too many tunnels fighting for the same members. When that happens, membership growth stalls and pricing power fades. Before buying, study how many competing washes sit within a few miles and whether the local membership math still works. In car washes, the submarket is the make or break. And Florida is about as good a car wash market as exists. Cars everywhere, year-round sunshine that makes washing a habit, plenty of dust, pollen, and love bugs to wash off, and a steadily growing population. A well-located wash on a high-traffic corner taps all of that. Even setting the business aside, a hard corner pad on a busy Florida arterial holds real underlying land value, the quiet backstop beneath the tunnel. Putting it together, the Express Car Wash is a high margin, subscription driven business that an investor can own passively through a net lease. Recurring revenue, strong operators, and durable corners, balanced against the real risk of overbuilding. Underwrite the operator, the membership base, and the local supply, and the car wash can be one of the more compelling cash flow plays in net lease. Car washes prove that a simple service can become a powerful subscription business and a passive net lease investment. The economics reward those who understand the membership model, the operator's strength, and the local supply. If you're evaluating car wash or net lease real estate in Central Florida, that is exactly what we do at MaxLife Commercial. The link to connect is in the description.